So we are having this very special interaction, Temasek India Outlook. They've just completed the year globally, and of course have a very wide network of portfolio in India too. So we are going to talk about how this year fared for one of the most foremost names in the world of investing. And Ravi Lambah, head of India operations, is joining us for this chat. Ravi, thanks so much for your time. Always look forward to having this interaction of ours. You know, the last year or the financial year gone by at Temasek level, I was just looking at the data, was a pretty outstanding one. And not only this, the year gone by, which was in the middle of the most difficult time the financial world has seen, what a commendable feat the firm has achieved, 14% compounding for the last 47 years. That's something, but I'm sure the basics of investing were quite aptly tested in the last, say, 1.5 to 2 years, even at the firm level, isn't it?
Yes, thank you, Ajay. Thanks for having me on your show. And look, yes, you're absolutely right. This has been a very difficult year from many respects. The results are very, very good. We are very happy to have reported a positive return. It was a very busy year as well. We in perhaps the largest investment year we've had. We invested $49 billion of investments, and we sold about $39 billion globally. And when the pandemic started, it was a very difficult time. All of us were, trying to see what challenges it would throw and what kind of, what we should think about in terms of how the pandemic is going to unfold, how it's going to affect our portfolio companies, how it's going to affect people, etc. And we spent a lot of our time in the early days of the pandemic trying to understand the impact it might have over a period of time. And we also tried to understand the impact it might have on our portfolio, and we spent a lot of time thinking through how we can help our portfolio companies that were directly impacted by the pandemic. And then towards the end, towards the last several months of the year, we saw companies that had obviously been very digital focused, and because the pandemic, brought to a lot of physical activity to halt, it energized companies that were, digital in nature, and therefore we saw them benefiting from the COVID-19 impact, and we saw those stocks perform quite well. So a combination of our companies that were affected by the pandemic coming through slowly as the world came back online, and our companies that did well through the pandemic helped us achieve the results we did.
Right. Ravi, in India, how are your operations this particular year gone by? How many new deals have you initiated despite of the challenging environments, and how many were fresh, and did you also do some follow-up rounds in your existing portfolios in order to extend them a helping hand, which was more or less the practice in the industry?
You're very right. Actually, we had a very interesting year in India too. Perhaps we were constrained by the ability to travel across the country, but we were able to help to do follow-on investments. Some of our companies that we had been invested for quite some time, Zomato is one example, CarTrade, USD. We were able to put more capital in them as they expanded their business. We did a few new investments too. We invested in upGrad, upskilling, retraining business. It's online based. We put capital into Licious recently. You have seen that happened right after the year, but we had been looking at that business for some time. And then we also put capital into Good Worker. So there have been some interesting investments that we've made through the pandemic, and also been able to help our existing portfolio companies.
Right. Ravi, I'm glad that we are also having this chat. Just at the cusp of history being made, the startup ecosystem for years did not get the due attention in terms of the kind of value they have created. And now everybody is sitting up and taking notice the way they have fared because of technology enablers behind in the last 2 years, help the citizens and the countries to run their operations and mitigate a lot of issues. But also a new set of investors are waiting for them on D Street. Zomato is going public. You have almost 2/3 of your entire portfolio in this technology-enabled startup ecosystem. How is it for you? And you've done the journey. when it was just a promise and now the company has achieved this scale and now is entering D Street. What are your thoughts? Because people, naysayers are saying, how to value these companies? There are no profits on the table.
Yes, it's a very interesting question again. I mean, look, I think our journey with the tech-enabled businesses and the tech-native businesses like Zomato, which is tech-native, and there were some businesses that have been tech-enabled, started many years ago. And globally, we've been looking at this as a trend. In fact, our investments are guided by 4 structural trends. One of them is digitization, and this fits Zomato, for example, fits very well in that trend. Frankly, all these companies that are digital native have to start businesses. They need capital, and then they need to grow their base of business, and it takes time. It takes time. It takes capital, and as they reach subscribers, they convert subscribers to paying subscribers. Cash flow comes in, and then the companies start generating free cash flow. That takes time. So our view in all these businesses is, as we look at them, we look at the potential, we look at the management team, and we have a very, very long runway because we are flexible with our investment mandate, and we look at these businesses in a long runway, following the digitization trend, and as long as execution is good, the results should actually work out well. And that's how we looked at all of our early stage businesses in globally as well in India. And the startup ecosystem, Ajay, you're right, has really come to bear in India. We are seeing a lot more activity with new entrepreneurs coming in. You may have seen we invested in PharmEasy earlier this year, and that was another example of a digitized tech-enabled business that was able to grow especially in an environment that was hit quite hard when physical activity was restrained. And more importantly, as the tech startup ecosystem in India has evolved, more financial investors have come that are able to fund these businesses, and then it's a good flywheel. You see the entrepreneurs, you see the capital coming in, and then if the execution is good, then you see good results.
Well, that's correct. Even PharmEasy, where you are invested, was a meeting of 2 different cultures, and what amazing promoters. We spoke to them and are regular on our channel. When the companies are joining hands are to become something even bigger, when they were just following their individual business models. How do you see the transformation? Both Mr. Velumani and the founders of PharmEasy say that together the kind of growth and the scale which can be achieved over the years could be way bigger than the way they were individually as companies. What are your thoughts on the transformation ahead which lies ahead in PharmEasy and the diagnostic company, Thyrocare, coming together?
It would not be fair for me to comment on any of our portfolio companies on their future and their plans. But what I would say to you is that as we think about this space, and these are really changing the way consumers consume. And that's another one of our trends. It's called future of consumption. So when you're sitting at home and you get used to getting medicines delivered to you at a good price in a very short period of time with little discomfort of having to go get them, it changes the way you consume. And I think the future of consumption theme, the trend that we're following, is seeing many such companies and business models feeding that future of consumption trend. So this is one example where efficiency comes in, price points are good, and therefore ultimately it results in the growth of the business as well as growth in the economy. So we are bullish about businesses that are able to tap into this trend.
Sure. No, I appreciate it. What I was looking for was just a color on the way things could pan out. Let's talk about the financial space. You have a very good chunk of your portfolio in financials. You've done some fresh activity in the year gone by as well. These are being seen as a very good proxy of the growth rebound which lies ahead as India Inc. comes back to normalcy and growth comes back. On the other hand, there is equal amount of fear on the asset quality front. You have a very good mix of corporate banks, retail, and even bottom of the rung pyramid financiers, bankers and lenders. What are your thoughts on the financial space?
That's a great question. The banks really are at the forefront of funding the economy. They are proxy to economic growth. And our exposure in financial services dates back to literally when we started our business in India about 17 years ago. And we've been invested in the banks. From the banks, we went into insurance companies. Then we went into fintech. We went to NBFCs. We're invested some of the Bandhan Bank, for example, and AU Small Finance Bank as an example on the on the SME side. So frankly, our spread of investments across the entire spectrum enables us to understand what's happening in India, in the corporate world and in the credit world. And what we see is these banks are well capitalized. They have great franchises. They are digitizing their sort of platforms very quickly, which is going to result in more efficiencies. And as the economy recovers and the economy grows, the banks as a proxy will recover and grow as well. So we stay focused on the fact that the economy is going to recover well from the pandemic. The fact that there's been liquidity measures put into place by the RBI when some of these end sectors needed it, help these companies go through the difficult times. And we think that as the pandemic comes under control, it'll all come back well, and then we will see growth again.
Right. Sure. In fact, if the first quarter updates coming in for the sector from many of these names, similar names, are any guide, things are looking upwards. Let's talk about the automobile space. On the one hand, the original equipment manufacturers, the main companies, saw a collapse as far as their sales are concerned. The used car market or pre-owned car market saw a very sharp historic surge, probably to do with the need for individual mobility, and of course, if served on a platter of technology and ease of transaction. I'm talking about CarTrades, Car24s, and many similar names which are doing very well, and also prepping for D Street. You've also analyzed the business model of one similar company. How do you see structurally the growth? Because globally, or the Western countries have seen big growth in this side. It was a very small area in India, but now perhaps is getting more acceptance.
Yes, I think the trend that we are playing for, and look, we did put more capital in CarTrade this year as a follow-on investment. And really the trend is simple. It is again, the way consumers are consuming things, and buying and selling of used cars is another factor of the way the future consumption will be. So we track that trend and we think about what this business means. It facilitates and makes it more easy for people to acquire cars. And frankly, at the end of the day, the pandemic did, sort of push into what I would call wanting to get in your own vehicle, so you could move around in a more safe environment as against having to travel in public transport. And then there's rising incomes, which is another great theme in India. People's disposable incomes are rising, so there will be consumption and they will be spent, and spend usually goes into lifestyle. So I think we're seeing digital platforms creating more efficiency in the market. Efficiency creates the ability to provide better product and services, and that in turn, matched with consumers having the ability to pay, means that people are willing to pay for premium products as well. So all of this, I think, wraps very nicely into our digitization and future of consumption trend, as we are very positive about that will flow in India. So these business models, Ajay, you rightly named, are in fact beneficiaries of these trends.
Right. When we're talking about sitting here, that economy is chugging back to normalcy, and India Inc. has coped with the vagaries this unfortunate pandemic brought about in a very smart manner. We also saw good adoption of automation in Indian factories when workers were away, digitization, and that is one theme which is getting some flavor in your portfolio as well. You have backed a very large transaction in automation, electrical automation space by way of Schneider. Talk to us about the larger picture where technology, engineering, electronics is all merging into automation to provide a big boost to efficiencies and productivity for corporates, because it appears that's the theme you're following here. Talk to us a little more about all the opportunities there.
Yes, again, it's a great point, because as we saw digital native companies come into play, we also saw the legacy sector getting more and more tech-enabled. And what does tech-enabled mean? Tech-enabled means using technology to make your manufacturing process, or make your selling process, or just to make your own administrative process more efficient. And for example, the deal you quote, the Schneider transaction where we invested almost $1 billion, it closed this year actually, and it took 3 years to close because it was a complex deal. Was a corporate carve-out from Larsen & Toubro, of the low voltage business. Now, when you bring together a franchise like that, along with Schneider's franchise, we feel that it gives a very good opportunity to go and go to market on what is defined in our minds as a growing segment of the economy. So what we will see likely is because of high value technology being deployed, better products will be delivered, and better products will be delivered at lower prices in a more efficient manner, which will drive again productivity in the economy. So this is again playing to the theme, where we think in terms of sustainable living. And by the way, these products are being made in a more ESG friendly manner. And sustainable ESG is a core part of our investment focus going forward. In every investment we make, we will focus on ESG. We have made some goals for ourselves in the field of sustainability. And this is another example of how we will track our own efforts in sustainability.
Right. Actually, you gave me a cue for my next question, Ravi. Right from the largest market capitalization company in the country to almost everybody you speak to, every annual report, by the way, this time has got huge area devoted for ESG, sustainability role of their company in environment improvement. How do you see the commercial opportunities arriving due to this, and how at Temasek, be it in our country or even overall, is looking at participating in such, because this clearly means backing good things and of course good commercial reasoning behind that.
Sure. I mean, okay, that's a great question too, because none of us would do well if the planet was not doing well. So I think sustainability is a key part of how all of us have to think, and countries and companies alike. At Temasek, we have set ourselves objectives where we would like to halve our net emissions by 2030 from where they are now. And we're looking to be neutral when we get to 2050. And frankly, that journey will not happen if we don't do a few things. One is investing in companies that are ESG compliant. That's going to be an important aspect of our investment policy going forward. We've also, in fact, added long-term incentives for our employees where sustainability is a key part of how employees will be rewarded. So that'll obviously influence the way we make our decisions as we make investments. At the same time, we look at sustainability as as an opportunity to create value. The value could be created either in existing businesses that are reforming, and it's a journey. We will definitely spend time with our portfolio companies to help them and guide them through the journey of sustainability, so they can emerge far more sustainable and in much better shape. In that context, we will make investments in India and globally. We are looking at products being provided in a more sustainable manner. We made an investment recently. You may have seen in a company called Licious. We announced that recently. Again, that company is focused on the sort of farm to fork and providing meat and fish products in a sustainable manner. And sustainability is going to be a key part of our investment focus going forward.
No, I was just looking at the review document. I mean, 47 years, 14% compounding is no mean feat. Just last couple of questions. How's your research board looking like? The proposals on the table, not specific ones, but a color of areas you are researching or evaluating or brainstorming regarding, because you've always provided us very good insights on how the trend which could take shape and become more meaningful going forward. If you could share some color on things on your drawing board.
Sure. I think the stuff that we are looking at that's new and more groundbreaking, I would say, comes down to the new trends that we're seeing in some businesses. So agri is a good example, and agri-tech is a good example. We are very encouraged by what's happening in that space. In order for the world to feed itself, there has to be a more sustainable basis of producing food. And we're looking at some of those trends. And in India, for example, technology can be a big driver how some of the inefficiencies in the agricultural supply chain can be fixed. More importantly, farmers are quite fragmented. Land ownership is fragmented. At the same time, access to businesses needs to be consolidated, and maybe technology can help layering on credit, layering on financing support, layering on insurance, etc. So many other facilities can be put into place with technology that can help the agri-food space become more technology enabled and then more efficient. So and then of course there's the whole aspect of food security. There's the whole aspect of how do you think about agri-food and protein based production of sustainable products like plant-based meat, etc. So there's a whole gambit around that, and we're looking at that quite closely and trying to understand how that might play out and what that means for us in terms of investments. At the same time, there's disruption going on. I mean, there's as we know, there's blockchain. There's blockchains causing disruption in businesses. There's an element of disruption where companies are disrupting themselves, and this is not new. But what has happened with the pandemic has been there's been a higher need an urgency to go and disrupt your legacy business again by deploying technology. So at the heart of it, really, is data, ability to study data, analyze data, whether that pertains to sciences and healthcare, whether that pertains to consumer businesses, and whether that pertains to all legacy businesses like shipping and energy, etc. Data is at the heart of it. The heart of it is technology, trying to figure out the right technology roadmap, as well as the right enablement of technology of the business. And then, of course, there's the efficiency of the markets, and then making sure that you can have a good business model. So we are agnostic to sector and markets. We look at opportunities on a bottom-up basis globally, and all of these trends are feeding into what's coming up on our table right now.
Right. All right, Ravi, we'll let you go on that one. Thanks so much for joining us. It's so educative and insightful chatting with you. That half hour just seems very insufficient, but thank you very much, whatever time we did get from you. And thanks for all your colleagues for arranging this.
Thank you, Ajay. Thanks for taking the time.
Thank you,
good
Ravi.
to see you. Take care. Stay well.